At C3, we regularly receive feedback that business income worksheets are a little bit confusing. So we're going to simplify that process for you so that at the time of loss, you can be assured that the value you set on your policy is adequate to cover your expenses. But first, let's cover what business income actually covers. At the time of loss to a building that's scheduled onto the property policy, the business income will help cover your operating expenses, your payroll continuation, extra expense associated with moving to a new location, and loss of income. Now, it's important to know we have created a simplified process here. So rather than giving you every single thing that may be covered by the policy during a time of loss, we're doing the 80% rule. So 80% of the expenses that you would need to cover at the time of loss, we have simplified into line items that we're about to review with you. First, we'll take a look at the continuation of our operating expenses. This includes your mortgage or rent, utilities, taxes that are not income related, insurance, maintenance, and any other expenses that you would continue to incur during a time of loss. Next, let's discuss payroll continuation. You may or may not choose to include this as a part of your coverage. If you're a manufacturing facility, a distributor, a construction company, it's typically fairly easy to lease another location and replace your supplies and continue operations. If you're a restaurant, let's say, it may be a little bit more difficult to identify a new location, and thus you may not want to cover the payroll of non-essential personnel. So let's take a look at the categories that you may want to include. Payroll for your officers, executives, and essential personnel. Payroll of all other personnel, let's call them non-essential, and the taxes and benefits associated with that payroll. If you're able to relocate to a temporary location, then we need to consider something called extra expense. And these are the items that are associated with the move to a new location. That would be the expense of actually moving to the location, any alterations or build out at the temporary location, temporary equipment, an extra expense that's associated with the labor necessary to make the move, and any other items that are associated with operating out of that temporary location. The last step is to take our loss of profits over this period of time and add it to our operating expenses, our payroll continuation, and extra expense to come up with a total. When completing the worksheet, we recommend that you first start with taking a 1-year period, so that way you can work off your financial statements and come up with an annual value. But we all know that building permits, engineering, construction is taking longer and longer these days. So once you have your annualized costs, then you want to consider extending that period of indemnity to either 18 months or maybe even 24 months so that you have adequate coverage in place. This is important because this type of coverage uses something called time element. And so it's going to cover your losses associated with a specific period of time. The shorter that amount of time is, the more restrictive the coverage. Thus, you may want to extend your policy from a 12-month period to 18 or 24 months to make sure you have adequate coverage in place. If you have any questions, please reach out to us via relations@c3insurance.com. If you enjoyed this educational video, please click that like button down at the bottom left-hand corner and then move on over and punch that subscribe button for us. Thanks so much, and we'll see you in the next video. Be on the lookout for more C3 Academy videos where we take complex insurance topics and we break them down into terms that normal business people can understand.